Hello friends, in today's video we are talking about session trading, how you can use the Asian range to aid your trading and at least get something out of the market. We've done a short clip on that, promise to make a complete video, a practical aspect of it to show you exactly what we are talking about, how you can carry it out. Once again, I want to say thank you for being part of the liquidity narrative, for your support. I'm grateful. Thank you. So let's dive in. We've said that we have three different section trading where market actually is doing something, the Asian range, the London section, the Asian section, and the New York section. So the reason for this is for us to learn something about the Asian range. Most times the Asian range is kind of in a consolidation, which is a good thing as the market open. We've said that market does not move randomly. This is a programming language and it can be decoded, and people has done that. So what are the things we are looking at when we are trading section trading? Sometimes you may not even have a bias. There are some things that can help you to recognize exactly what to do, which is liquidity narrative, which is liquidity. And that's the reason we are doing liquidity narrative, kind of mapping liquidity and narrating exactly all the probability, the high probability of what price is looking at for. So when is your Asian time and what are we looking at? How is it going to help you in your trading? Let's dive in. As you can see, we said we are looking at a practical aspect of it. If we move in time, you might not know your bias, but at least do you know the Asian range on how to use it? This is the reason for this. So if we've mapped out some level, which we used in our short clip, that's why we keep it in order to help us. And this is not cherry picking. Like I always say, after this video, go back to your own chart, look into your charts and do the same. Then justify by yourself, does this thing work? We are not predicting price. We are not predicting the close of the market of the price. We are just giving you the high probability on how you can trade and get something. So what do we do with the Asian range? Most times the Asian range is kind of a quiet Asian trading time most times might be a quiet time. The market has gone quiet and created a kind of consolidation in the market without much move in the market. So what we want to use, we want to use those time to aid our trading. What are we looking at? What exactly are you going to look at for in the Asian range? If you know your bias, that's very good. It's will be an added advantage. So what we do as the market resume, before the market resume, the London session and the New York session resume, what are we going to do? We are going to look at and map out between all time here is based on New York trading session. So we are using the UTC -4. So all time. So the Asian range or the Asian timing, we are looking at the 20:00 o'clock. That's ninth time, the 8 p.m. night time to 00 as the market regime. As you can see, we mapped out those areas. Where are the highs and the lows created within that range? We can see this is the move within the Asian range, and it wasn't a much move. It was just not much. So we map out the highs, we map out the low. Most times, if we are bearish in nature, we want to see the high of this range being taken before price reverses. Does it work every day? No. Does it work most of the time? Yes. So that's why we said it's a high probability trading also. So when you map out the highs and the lows of that range, if is a bullish market, we want to see the low of this section being run, liquidity grab. We want to see liquidity being grabbed on this section. If it's bearish, we want to see the low being taken before price will go up. If it's a bullish, we want to see the highs of this session being run and price goes low. So let's start. Today is Tuesday. Let's look at it. Tuesday. I didn't use Monday. That's the Monday section. This is Monday. Let's start from Monday apparently so that we can justify everything. The market resumed. We had the Asian range between the 20 o'clock and the opening of the day. We created the highs and the low. The market resumed. No high was run, no low was run. Price dropped. Beautiful. So If you're waiting for that particular strategy, you didn't get a trade in this, no issues. Price dropped huge on that Monday. So on the Tuesday, we created the same format. You can see the highs of this session was run and price dropped. You got a trade. You scared through, maybe targeting those lows, and that's you for the day. Then on Wednesday, the same week, we mapped out the highs, these obvious highs within that range. Price run that high, but even if you use those, you can see if you go back in time, this was the previous day high, which is our high. Price run the liquidity above that highs and then drop down. So you got a trade 2 out of 3 days. Then you move again on the next one. We mapped out, yes, this is an obvious high. Maybe you can say you want to use it, but this is obvious. If you drop on a lower time frame, you can say this is the obvious within that range. So we map out this, we map out this. What happened? Price run through their highs also and drop. You got a trade. That's 3 out of 4 days. Then on Friday, okay, that was it, right? That was what happened. So the Thursday and the Friday, okay, this is us done on that particular day. This is Friday trading. So the market has finished. We've been able to get 4 trading out of 5 days. So what does that signify to you? Does it work or not? So you can justify by yourself that this worked. That is how you use the Asian range to aid your trading. You look out, even when you don't know the bias, look at what the market is doing and map out your Asian range, the highs and the low, and watch those level and see exactly what price is going to do at those level. Remember, the most important thing about this is not for you to memorize timing or predicting candle close or forcing setup. The goal is for you to understand where liquidity lies. Liquidity lies between the highs and the lows of those sections, and it helps you to get a trade in a particular time and understand when it's being attacked and when price is likely to expand. That's how you can use this section. Remember, you're not trying to predict anything. You're not trying to, and the move is not when the liquidity or has been attacked. Just watch those sections and see what price is doing at those level. They will edge. It will help you to know exactly what you're doing. You can see each section, price attack the highs and price moves. So your duty is not to jump in, just watch what happens after liquidity has been taken and then go through your charts. I will say this to you, go through your chart, map out your Asian range, the highs and the low, and see what price does at this level. You can do it in any pair of your choice, and you will see how many trades you'll be able to get in a particular week. So this is not prediction. Price does not move randomly. Price has something that is seeking, and there's always something to help you know exactly what to do in the price. That's the liquidity narrative that we are teaching. The section trading, how you can use the Asian range to aid your trading. Remember, this is liquidity narrative. It's structure over speculation. Thank you and have a lovely time.